Welcome back. In part 1, we mastered bullish structure, higher highs and higher lows. Today, we flip it. We are diving into bearish structure, lower highs, lower lows, and how to spot a true trend shift versus fake moves. Stick with video till the end. I guarantee you will never need another structure video again. Because once you understand both bullish and bearish flow, and follow our full structure series, you will start seeing the chart like a pro. As a true teacher, I highly recommend you to make your own personal notes while watching. It is the best way to memorize and lock these concepts in your brain. All right, quick recap from part 1. Video link is in the description. In the previous video, we learned that the market does not move randomly. It moves in a structure, wave by wave. In an uptrend or bullish move, the market creates higher highs and higher lows. And we studied the rule for a valid retracement. At least one bearish candle must close its body below the lowest wick of the previous bullish candle. Only then we call it a valid pullback, a structure point. Now, look at this example. Here we mark the high and low of the last bullish candle before the retracement started. The first red candle does go above the green candle's high, so it takes liquidity, and the high shifts here. But notice something important. All the red candles stay inside the range of that green candle. Yes, the price pulled back, but the retracement is not valid for structure. Do remember why. Because no bearish candle body actually closed below the wick of the last green candle. So even though there are multiple red candles, we do not mark this as a higher low. This wave does not give us a structure level. In this example, you see there are 2 wicks below the green candle. This is also just a liquidity sweep. In this case, some traders do mark this as structure because one candle, the fourth one here, has a small body below the wick of green candle. But as per our rule, the low of that green candle is already shifted below the wick of this third red candle. So this red candle is considered as inside candle because its body did not go outside the wicks. Here is a quick disclaimer. Different traders may treat this differently, but always stick to one rule to avoid confusion. And in our rule set, we want clean, clear body close, below all these wicks, not tiny touches, not wick games, no noise. This keeps structure simple and accurate. Now compare it with this next example. Here we see a proper retracement, multiple red candles closing cleanly below multiple bullish candles, and then price continues upward. That is a valid pullback, and we can confidently mark it as a higher low. Here you see an impulse wave in a bullish trend. Do you know what an impulse wave is in a bullish move? An impulse wave is the move that breaks the previous confirmed high, the previous higher high. When price closes above that confirmed high, that push is an impulse. It shows strong buying momentum. Now in this case, these are 2 impulse waves in bullish direction because these both have broken the previous confirmed structure level. Now let's focus in this area. After this impulse wave, the market retraced and made many smaller swings. This is sideways or ranged movement. Then finally, another impulse wave pushed the price and broke the higher high again. After this bullish impulse wave, we have to find the higher low in this area. Now the key question, out of these 4 points, here, which one is the confirmed higher low? Are all of them considered, or only the last one? The answer is no. Not all these points are confirmed. In this area, you must find the lowest point only after the impulse wave formation. So, this is the confirmed higher low, because this wick is the lowest point in this whole retracement. That was the bullish recap from the part 1 of our structure series. Now, let's flip the logic and study the bearish market structure step by step. Let's say the market went up to this high, and then started reversing in a bearish direction. Now, in this bearish leg, we'll look for a valid retracement, a temporary move back toward the buy side, before the market continues down again. In this case, before any retracement happens, we first identify the last sell candle. Here you can see. These are the places where retracement happened. So in these areas, identify the last sell candle. Let's start from top to down. Here. Before this retracement, this is the last red candle. Mark its high and low including wicks. Now, if any one candle or a group of green candles closes its body above the high of that red candle, then this movement is considered as a valid retracement. Here, these 3 green candles fulfill that retracement rule. Once we get that body close above the high of the red candle, we can now mark this low, including the wick, as the confirmed low, because it is the first low created from this new top. Remember, because of this wick, the low of red candle is shifted to this wick. Now, the market continues its move in the sell direction and breaks below this confirmed low that we just marked. Once the red candle body closes below that low, this confirms the recent high, and we now label it as a lower high. You might be wondering, why do we call it a lower high and not a higher low? Sounds confusing, right? Let's take it simple. When the market moves upward, the word high comes first. So, we say high, higher high, and so on. But, when the market moves downward, everything is lowering. This time, the word low comes first, and we will use the terms lower high, lower low. That's it. Easy and logical. Before we continue, look at the next few waves carefully. Can you mark the structure levels below? Pause the video, take a moment, and then let's continue together. Here you can see there is no valid retracement, so we do not mark any structure point here. But in the next example, we do have a valid retracement. After these 3 green candles moves upward, this low, which we now call a lower low, becomes confirmed. Then, the market continues its sell direction again. After breaking this confirmed lower low, this recent high is confirmed, and we mark it then a lower high. Next, we again see a valid retracement, so we mark the structure points here as well: lower, low, and lower high. And finally, in this last example, there is only 1 green candle, but it is still a valid retracement, even though it is not very strong. Technically, it is valid because the green candle's body closed above the high of the last red candle. So, we will still count it as a structure level, though it is a structure level. But remember, single candle retracement is considered as weak, and we will further clarify this in upcoming videos. We'll continue this with more complex chart examples in the next video. We really work hard to make this content simple and valuable for you, so please like the video and subscribe to our channel. It truly helps us and keeps us motivated to create more lessons like this. If you have any questions, drop them in the comments below. I personally read and reply to each one. Thanks for watching, and see you in the next video.